Hi, this is Kim speaking. Welcome to a midweek update. Okay, a bit of a topic before I get going in terms of a quick update. I was on a one-to-one session today with a new trader, and we were talking about a strategy, and was just running through a strategy, and it really dawned on me because before long it was very easy to get more complex and show more, but at the end of the day we didn't need all that much more to be running with a very good strategy that works very, very well, quite methodical, quite very easy to follow. Well, I hope so. He's off and he's running with it now. So very, very basic rules. But the thing is, we try and get too technical. Now, a few weeks ago I posed the question, does technical analysis work? Well, the answer to that is yes, of course it works. Does fundamental analysis work? Yes, of course it works. Can you put them both together? Of course, they work wonderfully together. And it then sort of gets people thinking, well, I need more and more information. I need to do more and more. There's only so much you need to do. And I really think the more I speak to people and the more I'm trading, is that my best trades come from the most simplest things ever, and the most simplest things. And I'll give you a couple of examples. Now, I haven't got everything on this chart. There's one other thing on this chart which would make my trades absolutely perfect, and it really gives me the reasoning behind what I might be looking at. But if you just, this is a 60-minute chart with a 50-minute moving average, and really we can see what's going on from this chart in terms of the possibilities just from simple price action. And the thing is, as I say, people will want more and more stuff, and at the end of the day you end up with a chart like from a 60-minute chart like that to a 60-minute chart like this. Now, can I learn more from this 60-minute chart? Yes, of course I can. Do I need it all? No, of course I don't. But in fact, some of it almost sometimes I think gets in the way. What I propose here is you look at your strategies and strip back some of the things that you don't really need or are just noise. Because sometimes we just layer things on, and some of the things, like you may have about 15 different moving averages and loads and loads of other things laid over. You may have the bottom filled up. I've seen people with 3 or 4 different things looking at one go. I mean, I have a layer of things here, but I rarely look at look at the MACD. I'm looking at the RSI. I look at the average true range once in a now and again. The stochastics may have a quick look every now and again when it's brought to my attention. There may be one of our strategies setting up. I'll have a look at it. In the main, I rarely look at anything like that. I may just look at the RSI in day to day, and I keep it relatively simple. Some of my best trading is simple. Now, if you just look at this chart here, some simple things for moving average, for example. Now, Charlie, it's funny actually, with this particular idea, is something, it's not new or anything, but Charlie covered it a long time ago. I remember him showing it to people, and it's the first touch of the 50. We had it today, this morning, first touch of the 50. If you just look at the first touch of the 50, okay, sometimes it may hang in there, so it's pulled out, pulled back, it's reacted straight away back over here to the left hand side. Just make sure you can see what I'm talking about. So it happened over here, but this morning, look, it ran into the 50, and these first touches of 50s, they're fine. I mean, this is just one thing here on a simple chart with a 50 moving average and price. What else does the 50 average tell us? Well, when price is above it, it's probably slightly more bullish than if it's below it, regardless of what time you're looking. It's a good pivotal region in terms of price action. So when price is running across and it's staying above, generally I prefer to be on the long side. Now, I was short this morning, but for a single reason, which turned into a nicer trade, which gave us a move right down to that 50 moving average. Now, as it happens, it became a target, and but again, it's just simplicity in terms of looking at price action and the targets. As we scroll through here, we can see lots of things, even when it's choppy. Okay, choppy, what's it telling me? Probably not to be in the market too much. It's choppy. I may need to look at a different market. When it's more flowing like this, I could just this is how simple trading is. It's below its 50 moving average. I could just take sell points, going with this lower highs, lower highs, lower highs. Yeah, sure, at some point it's not going to go much further, But I mean, at the same time, this is how simple it really could be if you put your mind to it. And what I challenge you to do is see what you can take off your charts, how more simpler you can make them. I may actually have to do it myself now I mentioned it, but that's going to be hard. Okay, the reason I have so much on this is because I'm overlaying 3 or 4 strategies on one chart, so it makes it a little bit more complex. But in the main, you can get away with just a chart like this. And to prove it, here goes the weekly update. So let's change to a daily moving average, a daily chart, and look at what's going on here. Okay, so what we can see predominantly, cable is below the 50 moving average, so it's still erring on the bearish side. We have from a candlestick pattern here put in a pivot swing over the last 3 days. Today it's not quite, it's just cracked to the top of that, so we could see a continuation upwards. Now if we see the continuation upwards, obviously 50 moving average makes a reasonable target for us to be looking at. So there's a chance that we could be pushing up towards that sort of level. So at the moment, my overall short-term, intermediary term, because of what the hourlies are doing with the higher lows, yeah, I'm a little bit towards the more bullish side, and because it's above its hourly 50. But on the more sort of longer term here, I'm still relatively bearish on cable. Looking at the euro dollar. Now we got so close to running into the 50 moving average, and we keep on doing this. We get close. Sorry, just move these markers out of the way so we can see a little bit clearer. It's just some typing I've done. Right, sorry, just put that back on. Okay, so got rid of the typing, but we got so close to coming back to the 50 moving average again recently. But again, it's weak. It's below the 50, and really, I mean, again, we put the pivot swing in. We never really managed to get much above that sort of level, or to even towards that level this morning, which to me suggests it's still weak. Even when there's sort of more positive comments coming out, it's still relatively weak. In the market, if you can't do any good when the market and comments are coming more bullish, well then it's a weak market, and this is what we're seeing here. So the dollar remains strong here. Dollar yen. Okay, it's the dollar yen's just much more in a consolidated phase. I am going to just use a bit of technology here just to show in terms of the phase it's sitting in. There it is. It's sitting between 116, 122. It's look at what's happened to the 50 average. It's flattened. Well, of course it has, because the price is flattened here. It's still pointing a little bit towards the upside here, but we could well consolidate over these days. And direction wise, I wouldn't like to really second guess. There's a possibility, if you're just drawing a simple trend line on the lows here, you see a break of this over the next day or so, we could come down lower. Next sort of points, looking at the horizontals here and here, so we could be looking down to 116, 115, well 16, sorry, did I say 116? It's a bit higher than 116 there. 116.90, 117 probably at that sort of area. So the key numbers there, around numbers 117, 116 certainly are sort of key areas where if it starts breaking down, where it could head off to. As I say, the yen seems possibly a tad stronger here, being below, effectively against the dollar, because remember this is dollar yen, so it's below its 50, so it's looking a tad stronger at this juncture. A weak currency, certainly for a weaker currency, although it didn't really give the sell-off expected today, is the Aussie dollar. Aussie dollar's just holding down here. There's a good chance it will break down towards the 75 area, but we have a lot of support, and I could just draw a support level around here, and there's the demand seems to be coming around this region here, so we've got a sort of demand level as long as it's buying around that sort of area. And I can see from the order books that we've got buy orders sitting at that lower level, particularly 75.50, around that level there's buying. But the more we sit around here, the more that will be absorbed, and eventually there's a chance of working that off. So again, I remain bearish on the Aussie dollar. I'll look finally at the Canadian dollar. Okay, another one which is a bit like the yen in terms of its movement. And look, we've got a whole raft of just put this here. whole raft of support sitting there, where we've been in the past, seen dollar buying and seen the Canadian dollar roll back upwards. At this point here, at some stage, we could see this broken. Now we've tapped. There's the sort of head and shoulder patterns on there and all sorts. There's another head and shoulders appearing. It's just chopping along. At some point, this is likely to break and possibly break at a reasonable distance. We may see a reasonable retrace of that. But for now, it does. For me, against the dollar, it is one of the stronger currencies. Relatively, that is. Okay, that's it for me. I hope you have a great week, and Charlie will be back on Friday. Bye for now.